The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and markets off of the lows, but still some mixed action. You get the S&Ps basically flat almost to the tick of the close yesterday. You see the action overnight. We had some volatility from about 6,015 down to 59.77. S&Ps trading right now flat, as I mentioned, literally to the tick at 6,000. NASDAQ 100, volatility as well, quite the day in some of those magnificent seven. NVIDIA shares trading lower yesterday as well. Right now, NASDAQ 100, again, you see the volatility, right? You almost had a 200-point run from this morning. Things were looking a little dicey at 21,286. You trade all the way up to 21,451. So what are you talking about? 170 points to the upside, but right now, negative by 0.1% or 22 points. Dow in positive territory. Home Depot out with their earnings. That's going to help the Dow. Marginal. You're up about, less than that, $1.50. Now, we digress, but check this out. Let's put this out in the newsletter today. Home Depot. I think it's just from where you were. Yeah, just from where you were at 415. You're talking about 5 or 6 days ago. We put this back on. Let's just go an hourly. No, not even. I just got to go. How far was I going back? That's what I was going back, I think, from 418. There it was. Yeah. That's an 8.5% pullback in Home Depot shares just from where you were Friday, February 14th. You come into the close yesterday at 382.42. So Home Depot, they're up this morning. You're up by $1.50, and this thing just pulled back 8.5%. If that's where the surprises are coming from in this market, that's not really that great of a surprise. Russell, basically flat, 21.85. Crude, you got to love it, man, $70.26. We'll be paying less at the pump. Gold contract pulling back $11 right now at a 29.51. We'll go back to a 15-minute. You see the dive down this morning. We got some selling at 7:30. You bounce back to where we were prior to that move at about 29.51. Now, how about these yields? It's not stopping, man. Let's see where we are right now. 4.32, 4.317 is what I have right now. I was checking. I was thinking maybe we got a 4.2 handle. 4.32. But boy, this move, right? Look at this move we got going on. Higher price, lower yield. The area you're going to be bumping into is the December 6th area. Okay, that's a full point above where we're at right now. But yeah, it's been a one-way trip. That's the next area of resistance right now. So you're looking at what? 4.25? Now what's interesting is we have the dollar. And we got continued lower price in the dollar, 106.42. All the pressure seems to be on lower yields, weaker dollar right now, and a weaker market. You take a look at the weekly, right? Decisive break. And you see we're coming into these levels. You had a high from June of 24, 106.13, right below where we are. You're flirting with the areas from the high of April last year, and you're also back to the area we had in March of 23. All critical technical areas of about 106 on that dollar. You break below that, you're probably heading to 100. 106 is a mark, man. And it's been this general area, but you're now at a make-or-break moment. You break below here, I don't think you're saving yourself at 104. The only thing at 104 that's out there is that's where you were prior to the election. Okay? You put it on a daily, and yeah, that's probably going to be an area on the chart if you're watching Tiger TV, right? You come into the election, and the dollar surges higher from 104 to 110, peaking out January 13th. And pretty remarkable, right? The whole move prior to Inauguration Day. And then since then, we've had a pullback because the threats have not come. I mean, the threats have come. The tariffs have not come yet. So the higher yield, the stronger dollar that might have come with January 20th, right? Tariffs on day one. You're seeing it play out. It's not coming yet. Now, that's a perfect segue to the action yesterday. You had Trump with Macron, and he's talking tariffs. Tariffs scheduled to hit Canada and Mexico next month. We're on time. Can you believe it's already a month? Can you believe it? Yeah. The reprieve was, where's the exact, because I had it, March, as in it was February 2nd. Yeah, March 4th. Trump was asked if the tariffs, which he delayed until March 4th. I mean, I know it's here, but I can't believe it's here, man. You're talking about a week from today was the delay they got. So we're going to get another shuffle this weekend, I imagine, coming into that delay. But strong speak, and we'll see how they play out. And is this going to be a 30-day affair? We will find out, man. And then what about the deadline April 2nd? So what's he going to do? We have March 4th talking about Mexico and Canada. Anyway, it speaks for itself. You get the point. We'll see where we go from there. But yeah, the market, a little spooked out at these levels. I think the NASDAQ 100, you're coming back to where we were last July, 21,000. Right? You're talking about 7 months of sideways action in the NASDAQ 100. But guess what? 7 months of sideways action after doubling in price over a period of less than 2 years. Okay, nothing to say we can't chop around at this level for another year even. We'll see where we go from there. And yeah, two of the big headlines out here from Bloomberg, right? You're talking about the first one with Canada and Mexico going forward. Again, a week from today, March 4th, okay? And then you're talking about China. And of course you're talking about China, and this one makes sense. It's always going to make sense. The next arms race is technology. Trump team seeks to toughen Biden's chip controls over China. U.S., Dutch, Japanese officials met about chip gear maintenance. So everything's on board as it should be. And, you combine that with the stories out there of Microsoft, right? Canceling some of the leases they have for data centers. That, of course, reverberating through NVIDIA. Now, perfect segue. We get NVIDIA earnings tomorrow after the bell. Can somebody find an article? And if you can, okay, if you're in the den, if you're in YouTube Tiger's Den, I don't hear anybody talking about it's such a sensational number that it was never really written that they lost $1 trillion in value from where you were at 153.13 down to the lows, okay, of 113. Okay, you're talking about a company with 25 billion shares outstanding. Then what you do is you make 750 billion on the run up they had. Folks, 750 billion in really, you make a low, and within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days, they made 750 billion in market cap. But guess what? Now we're off 325 billion. Okay, that volatility is not indicative of an underlying strength. It's indicative of unknowns in this market that could be worth that. But when you can lose $1 trillion of value and gain 750 billion back, think about the unknowns that this market's trying to price on NVIDIA when you're talking about China, you're talking about AI, you're talking about Microsoft canceling data centers. Not exactly indicative. And yes, this stuff happens all the time with growth stocks. But growth stocks are not commonly valued at almost $4 trillion. Okay? And you back it up to where we are right now. You're talking about 3.2 trillion is where we are about right now. 25 billion shares outstanding. NVIDIA shares, though, today, they're going to be down by about 10 pennies. And tomorrow, after the bell, is their number. And yeah, you got about an $11.20 move priced in just for their earnings. Almost a 10% move this week when you carry it through for $130 stock. Stay tuned, folks. We're coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&P is basically flat at 6,000. NASDAQ 100 slightly in the red. Yeah, keeping our eye on Home Depot. Decent numbers. You spike lower. You recoil. We're at about 385. You're up about $2.50. But as I said, right, if you're pulling back 8.5%, you're coming into the lows of 380. That's where we were on Home Depot on January 8th. Okay, that's where we were on November 6th as well. You check this out on Home Depot, okay? Look at that technical area. The high we were at in March of 2024. So, yeah, that's a nice area. You know, you're looking to get in Home Depot. You're off 440. You're at 382. You're trading at 385 right now. But the thing I love about trades like this is your back's against the wall. You know, you're making a trade like this, whether it's short-term or long-term, you're trying to get into this equity. Now, you can always scale in here, okay? But if you're making a trade, you know, 380 is your price point. That was your low coming into this. That was your low coming into January 6th. That was also the technical area back here on March 18th. And let's see if we go back further than that. Yeah, you get the highs out here of 2021 of 420. But it's a tough one. When you're holding Home Depot for 4 or 5 days, you pull back 8.5%. They come in with decent earnings. And to get the Home Depot numbers out there, I mean, the headline out there, they break their comp sales losing streak. They beat estimates. Okay, you trade up $2.15. And meanwhile, this thing's been off 8.5%. They expect total sales to grow by 2.8% and comp sales to increase by about 1%. Comp sales have been a big problem for them. Broad-based growth as sales increased in about half of its merchandise categories in 15 of 19 geographic regions. They beat by a penny. You think they worked to get that penny? You think they worked those spreadsheets? Oh, I bet they worked those spreadsheets hard to beat by that penny. $39.7 billion by $39.16 billion. There's many things you can do in counting. Completely legal, folks. And a lot of the times it has to do with short-term versus long-term sometimes, right? Expenses on a short-term, long-term basis, how revenue is recognized short-term, long-term. And that's just from the most fundamental, simplest understanding of accounting. Talking about like accounting 1, accounting 2 in a business degree. But there's a lot. You've seen it. You saw it happen. In terms of when the market was really having a pullback, right? You saw some of these tech companies really reassigning how they were evaluating, how they were depreciating certain assets, how they were categorizing certain assets on their balance sheet to shift some of those numbers. So when you see a beat by a penny, be careful out there. But guess what? Revenue, that's real. Comp sales, those are real. I like those numbers. Revenue through $39.7 billion. Yeah. Revenue rising 14% in the year-ago period. Yeah, and comp sales, they've been a big one, and they're higher. But nonetheless, Home Depot, everything in context here. And look at that. We're giving it up as we speak. Something just happened. No, yeah. We got a bid-ask basically just above where we closed. All right, some of these NVIDIA numbers. Let's get back into NVIDIA because you can't help, right? The action on NVIDIA yesterday, look at that rip-roaring decline rally. You got to remember, 25 billion shares outstanding, okay? You trade from 138 down to 132. That's 150 billion in market cap. Remarkable. Now, the numbers that they're talking about here, pretty remarkable upon their own. 38 billion in sales for the quarter is what the market will be looking for, which their quarter ended in January. That would be a 72% increase on an annual basis. But here's the kicker, all right? How does this translate to the potential? You have the story out there, right? Microsoft, they might be culling some of their leases. Now, it's so hard to fight through some of this stuff in terms of, all right, are they reorganizing here? Can you imagine having to deploy this amount of capital that Microsoft is, that all the AI spends are deploying, right? I got the chart up here. I'm going to keep this one on hand as the AI spend is going to be in focus. And you better believe that this chart right here is going to be in focus tomorrow when NVIDIA comes out with their numbers, okay? 2025, yeah, 250 billion plus is what these 5 companies are going to be spending, and that's not including Apple. Now, Apple's a different type of company, but nonetheless, doesn't even include Apple. Now, you get into the types of numbers that they'll be talking about here. Check this out. Microsoft is going to account for 35% of spending in 2025 on Blackwell, NVIDIA's most up-to-date chip. 35%. More than 1 out of every $3 that NVIDIA is taken in is going to be from Microsoft alone. Google, 32.2%. My goodness. And then you got Oracle, 7.4%. Amazon, 6.2%. So you talk about, man, right? With Microsoft at 35% of their spending, and there's any reports that they are eliminating some of the leases for data centers. Now, Microsoft has said that they still plan on spending $80 billion on infrastructure in 2025. Okay, there's no pullback. They responded to the stories. But yeah, you better believe there's some volatility there. Google's going to be spending $75 billion in CapEx this year. How about Meta, right? Meta's going to be spending $65 billion. Amazon at $100 billion. So NVIDIA's going to have a lot to report for tomorrow, and expectations, $3+ trillion company. If there's any cracks in the wall, it seems like risk reward wise, you trade up to 153, yeah, you're pushing $4 trillion. But boy, you look at the run that NVIDIA has had, you look at these tech companies, and you look at the volume right now at these highs. Okay, we got a pullback the last couple of days. We got a spike in volume. We haven't seen these types of volumes since, February 3rd. Market saved itself a bit, but look at the volume we had on January 27th. Okay, we got a volume spike. Until something changes right now, we got pressure to the downside with the NASDAQ 100. Catching a little bit of a slide right now. All right. The horses are getting into the gates. We got less than 5 minutes to go, and we got market. A little bit of weakness with the S&P's off by 6, NASDAQ off by 46. Dow hanging on to gains by 45 points. Let's see what's happening in the Dow. United Health They trade lower on Friday, kind of chopping around at 460. Home Depot, they're going to matter in the dollar. Look at that, rolling over to negative. Those were decent numbers. I guess I'm not the only one saying how'd they find that penny to beat by profit, right? How'd they beat by a penny? You can imagine the CEO sitting in there. Anybody would. If you can do it legally, and they don't, I'm sure they might not even preface it, but maybe they mean it. Can we beat by a penny this quarter? I know it's a tough one. I know it's been a tough quarter. Can we beat by a penny? If we can, make it happen. Yeah. All right. It's going to be an interesting open, folks. We take a look at the VIX. Okay. VIX. Yeah. We got a real spike above 20. We were just up to that level. 1996 in the pre-market. We're at 1945 in the volatility index. And we got yields continuing to drop. Whoop. What happened to my camera? There we go. Maybe. All right, folks, stay tuned. We're coming back for the open and bell. S&P's off by 6. NASDAQ 100 off by 48. S&P is 59.94. Coming back for the opening bell. Stay tuned.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's slightly in the red. We'll call it flat, 59.98. NASDAQ 100, we're off by 50 points. That's about 0.2%. Dow in the positive by 168, off 0.4%, 43,706. You got the Russell flat right now. Yeah, Bitcoin taking it on the chin, man. 88,000. What? We got an 88 handle? 88,000. We were down to 86,000. Boy, you got to jump over to MicroStrategy. Right, down another 6% to 266 right now. MicroStrategy. Boom. You're talking about back to where you were on October 29th on MicroStrategy. You jump back to Bitcoin, okay? On October 29th, we're at least trading at 72,000, right? Yeah, quite a different story. Be careful on MicroStrategy out there. Crude, just above $70 right now, $70.37. We jump down to that gold contract right now. Gold just chopping around near the highs. On a daily basis, $29.57. We put it on a 15-minute. There's your high yesterday at $29.74. We got there again at about 6 o'clock. And, yeah, we got volatility everywhere in this market, man. You jump over to yields, higher price, lower yield. With the 10-year right now sitting at 4.32%. And I find myself watching the dollar. Yeah, all the pressure to the downside right now in the dollar, man. 106.36 in the dollar. You take a look at the daily, and you have this December 6th price point out there of 106. But as I've said, I think the dollar is trying to break below 106 here. Let's check back in. Home Depot shares. They're up by 1.4% on their numbers. And yeah, you got to like that technical area of 380. You got there once in November. You got there once in January. We got there again in February. And the market trading higher on their numbers right now. NVIDIA coming into their numbers tomorrow, down by 1.1%. Let's check out some of the Magnificent Seven. Amazon shares down by 0.25%. Microsoft down 0.7% right now. Jump over to Google shares. They're all in the red. Google's off about 0.6% right now. Meta's off 0.6% right now, and the NASDAQ 100 off a quick 70 points at 21,349. You know, on a technical basis, what's going to stop this thing from 21,000? Look at how 21,000 is such a nice technical area. Basically, the area you were at in January 13th, January 27th, the rebound on February 3rd, with the type of rip-roaring pullback we've had over the last week or so, 21,355 right now, but tomorrow going to be an important day what what NVIDIA has to say. And it's so important because the narrative of AI, right? The spend on these companies, the Microsofts, the Googles, the spend that they're going through, and that they have been carrying this market. So tomorrow is a big day, to put it lightly. All right, let's talk about hims and hers, man. Whew. You talk about a meltdown in no time. The Euphoria sends it up to 72.98 on February 19th. And this is where, pretty remarkable how it plays out. Do I have the article up? I thought I did. Let's see. Oh, not up there. Think I had it here? Yeah, so here's one of them, okay? But boy, this thing is a story. So the company had their numbers, but the numbers really don't matter. They really don't. They do matter, of course, because look at those numbers, okay? But guess what matters? What matters is that they've been selling weight loss drugs because there's been a shortage and they can't sell them anymore. And boy, you talk about a fundamental, you think you know more than the market. And if I had been trading this, I'd like to think that I would. Revenue increased 95% from a year earlier to $481 million. You should see the amount of ads that I get on social media from this company, folks, whether it's talking about hair loss, whether it's talking about weight gain. I don't know why they're hitting me, okay, with those two in particular, right? But yeah, the amount of money they took in, yeah, here it is. $225 million is what they took in from the GLP-1 offerings in 2024. And that's just gone. Yeah. They're allowed to produce them when the brand name treatments are in a shortage. Well, guess what? Friday, they said they're going to start taking action against compounders for violations in the next 60 to 90 days. There's no more shortage. They said in an earnings call, compounded will likely not be offered on the platform after the first quarter. We'll have to start notifying customers in the coming month or two that they will need to start looking for alternative options on the commercial dosing. For the amount of money they're spending on marketing, this company, folks, okay? You jump over to the Analyze tab. We're talking about a company valued at $9 billion, okay? And there's a lot of risk to the downside, we'll put it lightly, okay? You talk about, yeah, we had quite the ramp up here. It's what you like to see, but not more than what we had going on down here when this thing was trading at about $20. You see the volume, you see from where we were 3 months ago. All right. And boom, just like that, a majority of their revenue. And it's the best story out there. That's the problem, okay? You got a $9 billion company, and they sell a lot of stuff, but they're not going to be a $9 billion company selling hair loss treatment. Maybe they're going to try to be, but the weight loss deal, they spend a lot of money on marketing, and not sure how you're going to keep up when you're dropping drugs like that are revolutionary. And I guess you knew it was coming if you were in there. But there you go. Quite the story. All right. Let's see what else we got going on out here. What do we got pulled up? Let's jump to this one as well, right? Because here you go. It goes across the board. Now that there's not a shortage, Eli Lilly is going to sell higher dose vials of Zepbound at a lower price to boost weight loss drug access. I love the marketing of this. Where is it? All right, I'll pull this one up after the break. LLY is their symbol. Yeah, and a reversal of fortunes, right? Eli Lilly up 2.5%. There it is. Self-pay pharmacy. I love it. How about some self-pay pharmacy action for your weight loss drug? It's amazing the times we live in. Single dose vials, as much as half of its usually monthly list price. What's the monthly list price? $4.99 a month. $500 a month for $6,000 a year. And they're going to lower the price of both the lower dose vials by $50. So the 2.5 is going to cost $3.49. And the 5 milligram vial is going to be $4.99. Self-pay pharmacy. You got to love that, right? Self-pay pharmacy. For the amount we spend on insurance, you're going to start paying self-pay pharmacy for $500 a month. Lilly has said those vials are going to make more medication available because the auto injectors cost $1,000 per month before insurance. Pretty remarkable. All right, this one out yesterday, but yeah, I think of this one. I look at Walmart, I look at Palantir, I look at the market pricing. Let's see how Palantir is trading today. Off another 1.4%. We got a repricing in this market going on right now, man. They make a lot of money from the Defense Department. Different stories playing out. Jump over to Walmart, a little bit of a rebound. You're thinking long term, yeah. You can always start to scale into any equity. Walmart long term, they're going to be just fine. Today up by 1.6%. Growth stocks lower yet again. NASDAQ off by 92. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the NASDAQ 100, only index currently in the red. We got NVIDIA off by about 0.5% right now. And how about Tesla? Yeah, they've been talking about Tesla in the Tiger's Den. Boom. There's your 682, folks, all the way from where we were, October 23rd. You talk about a rise and fall. 216 to 488. We've now given up $170. How many shares this thing has outstanding? I'm talking about NVIDIA. 3.2 billion. Wow. Quite a number, man. Yeah. Over $500 billion. I don't know how it happens. $500 billion. Just like that. From 488 to 319. NASDAQ 100 off by 91 right now. 21,330. Put it on your charts, folks. 21,000. Look at the volume coming into this market, right? Last couple days, talking about 698. Traded on Friday, 659, and we'll see where we go today. You already have 190,000 contracts traded. S&P's negative by 2. We check in on Home Depot with their numbers, up by 2.6%. And how about this heat map? Man, so let's go to the S&P 500 first. Where are we higher? Well, Eli Lilly, Home Depot. What else we got? We got some of the industrials, Raytheon, Boeing, Walmart shares up by 1.5%. Costco up by 0.7% right now. Johnson & Johnson up by 0.4%. Merck up by 0.8%. Some of the financials. Berkshire continuing on their run, up by 1.4%. BlackRock up by 1.2%. Eli Lilly, as I mentioned, up by 2.7%. All right, but check it out. Check out the biggest equities on this chart right now. Tesla off by 3.3%. Apple slightly in the red. NVIDIA off by 0.7%. Microsoft almost a full percentage. Google almost a full percentage. Broadcom, Amazon off 0.6%. Meta shares off by 0.4%. Now you go over to the NASDAQ 100, folks. Not a lot of squares that represent large market caps. Costco seems to be the largest one out there. Look how big Costco is in the NASDAQ 100. $463 billion market cap. Almost $500 billion is Costco now. Tesla at $1 trillion market cap, down from 1.5 trillion. Right? Remarkable. I've been saying in the newsletter, all the surprises, pressure to the downside right now. You're seeing it again. We're coming into the pre-market lows right now at 21,286 with the NASDAQ 100. Again, down by triple digits to kick off the session 15 minutes into the day at 21,319. Let's check in on the VIX, 1961. And yeah, I would agree, baseball, that dollar. Keep your eye on it, folks. And, you know, EKS, great question. What's going on with the TLT? Let's take a look at the TLT. Earlier in the program, but let's take a look at the TLT, man. Now, the TLT is the 20-plus year iShares bond ETF, okay? Let's pull it up exactly what it's called. But it's 20-year plus. And what it means is, the iShares 20-plus year Treasury bond ETF, okay? So they have a selection of 20-plus year maturities. You're talking about going out duration, okay? You're up by 1.12% today. We take a look at this thing on a longer term. You have to chuckle because I've looked at this thing on a longer term, okay? We're not going back to 0% yields, okay? Don't get any crazy ideas of telling yourself that you can get into the TLT right now at 90 because you pull this thing on a monthly and you're getting it at the same exact price as you got from 2002, okay? Don't fool yourself into that game because this chart doesn't show you what happened before 2002. And you know why that's important? The reason why that's important, folks, is because when you go to the 30-year, okay, here's what that chart looks like till 2002. But going back from that, what are you talking about? You're talking about lower price and higher yield, okay? We have a huge recency bias to think that if you look at a chart like this since 2002, all the risk is for the price to go up in bonds and the yield to go down. But that is not the case, man. I think things have changed. Man, our man Larry Pesavento, he was on the air many times saying, folks, I don't get it. Negative yields don't work. The economy breaks. My brain doesn't understand to that degree. That's how it works. If you understand economics, they teach you in economics, there's consumption and savings, the C and the S, right? Do you remember econ? The C and the S, consumption and savings. And I remember it, man. All right, everybody wants to consume. We are consumers. The numbers say it, right? We are a consumer nation for sure. What is the impetus to save? Okay, the impetus to save is always that if you don't consume now, you save. You're allowed to then consume in the future more goods than if you would consume now, right? You make a rate of return on that savings. So there's an incentive to save. If you can consume now or consume less in the future, which is a negative interest rate, why would you ever save? Why wouldn't you consume everything now to a certain degree? Nonetheless, right? Don't get caught up in the fact that somehow, all right, when you look at the TLT, long way of saying, what's been going on is that on a daily basis, the tariffs aren't coming. Tariffs were supposed to come day one. The market has figured out that was rhetoric on the campaign trail. Don't hold it against me, okay? It's nothing political, but boy, we heard day one many times, okay? We're now a month and 5 days. It's February 25th. The president's been in office since January 2nd. We got the reprieve to March 4th. You have the reprieve for reciprocals going further to April. Nonetheless, the market has figured out, and, maybe things will change. That's what is the X factor here. But the world is not going to get lit on fire by the type of tariffs that were talked about on the campaign trail. And as a result, yields have pulled back. Okay. As I mentioned, right? What was the high in yields? The high in yields was a few days before the president took office. Okay. Since then, yields have dropped. Since then, similar dollar action. Okay. That's why we talk about the dollar. So you watch tariffs, you watch the dollar, you watch yields. We peaked again. They're correlated. Of course they are. Okay. When yields were skyrocketing, the dollar was at 110. The market has recoiled. We got the 10-year yield at 4.32%. Looks like it's on its way back to 4.25. The dollar looks like it's about to break 106. Okay. And if we break 106, all you got to do is get back to 104, and that's prior to the election. We're right there. Think about that, right? With all the binary choices of that election, we come into it at 104. Maybe the market was pricing in Trump as a favorite, but boy, it was still a close election as we thought prior coming into the night, closer than would have been out there. And the market was pricing it at least, and nonetheless, okay? So the reason why I bring it up as well is very difficult to imagine the types of changes that can occur without a little bit of pain occurring. And we'll see if you get a little bit of a recoil as we approach 4.25, but that's what's going on. But don't get caught up in thinking that this is easy money buying the TLT at 90, okay? Because, yes, there's the opportunity for rates to drop from here. But boy, we have a lot of recency bias, and we better hope we're never going back to 0% interest rates, okay? Because you go back to 0% interest rates, there are massive problems with the economy that the Fed's trying to fix. Beyond that, We are higher for longer in a healthy economy with AI, margins, profitability. Markets negative. We're coming back for one more segment, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets picking up steam to the downside right now. S&P's off by about 0.5%, 27 points in the red, 59.73. You're 200 points off of where we were trading at less than a week ago. Quite a pullback. NASDAQ 100 picking up steam yet again. Look at these red bars. Right now, what's so interesting here in the NASDAQ 100 on a monthly basis, we don't even got a red bar. Okay, you think this pullback is real yet? Be careful. Now, you go big picture. All right, we talked about this A to B, C to D. I've had it on the charts for a while. But pretty remarkable. 20,623 is the number for a full A to B, C to D from the COVID lows. COVID lows, how about getting into the NASDAQ 100 at 6,600? My goodness, what an opportunity, right? What do you got? A 200% gain almost out there. You're cherry picking the low, even if you got into it prior to the pandemic. But yeah, you're talking about it run up right to where we're trading at right now. And on a monthly basis, we don't even have a red bar. So, the volatility could just be starting right now, because that's not what market volatility looks like, folks. That's your growth stocks. That's the NASDAQ 100. Look at that longer-term chart. Now, for you bulls out there, that's your case, okay? We got the August pullback that we had. Remember, that was the yen unwinding. It pulled us down to 17,300. But, boy, you look at this chart longer term, there's nothing in this way, okay? You want to see what a healthy pullback could look like in this market? A 382 brings you right back to 17,900. Call it 18,000. Yeah, you're talking about potentially a 10% pullback, 2,200 points from where you're talking about 18,000. We're at 3,200 points. Yeah, 15% from where we're at. But NVIDIA today, keep your eye on it, man. Off by 2.2%, back to a 5-minute chart. There's some volatility for you. Down to 125.94 for NVIDIA shares. 125. We were just trading at 141 a week ago. Whew, you talk about volatility. Microsoft off by 0.5%. Amazon off by a percentage point. S&P's off by 16. We finish it up with the VIX, 1969. All right, folks, stay tuned. I'm coming back for the 10 o'clock update. After that, we got our man, Steve Rhodes, Larry Pesavento, Fast Market, Jacob Shoup. Have a great Tuesday, everybody.